Welcome, trusted advisors. This is the podcast where we explore what it really takes to build, grow and sustain a thriving financial planning business. Every fortnight, you'll hear candid conversations with the leaders, innovators and trailblazers of our profession. People who have navigated the challenges, embraced the opportunities and are willing to share what they've learned along the way. If you're curious, ambitious and committed to raising the bar in advice, you're in the right place. What happens when 13 of the most successful independent advice firms in Australia decide to put their egos aside and build something together? That's the origin story of Shadforth Financial Group, and today I'm joined by their CEO, Terry Dillon. Terry has been with the business for 34 years. He spent the first 20 as an advisor before stepping into the CEO role in 2018, right in the middle of a Royal Commission. Rather than running from the challenges that came with institutional ownership, he leaned into it. Went to the board and essentially said, if we can't make each other better every day, you should probably sell us. What followed has been one of the most compelling growth stories in Australian advice. Shadforth today has close to 100 advisors, 270 staff, 11,000 families, and around 20 billion under stewardship. In this conversation, Terry shares the 3 principles he uses to guide every major decision. He talks about a family advice guarantee I hadn't heard before that solves the intergenerational wealth transfer challenge in a genuinely clever way. We get into their technology roadmap, including a client app that moves advice from a static document to something closer to a live financial plan on your phone. And we talk about why 93 of Shadforth's 97 advisors started as graduates and what that tells you about culture. But it's the way Terry frames the ambition that really stays with you. He's not just planning to double the business by 2030. He's asked his leadership team to think about Shadforth at 10 times its current size. And right at the end, he shares the kind of firm he believes Shadforth can become, a name he wants spoken alongside the Freehills and the McKinseys of the professional services world. Make sure you stick around for that. This is Terry Dillon on The Trusted Advisor. Welcome, Terry Dillon, to the Trusted Advisor podcast.
Hey, Rob. Thanks for having me.
Thanks for taking the time to come on the show, Terry. It's great to have a chat. We've been talking a little bit of late, and I thought, gee whiz, this is such a great conversation. I'd really love to have you on the show and talk about what Shadforth are up to, what you're doing now, but also what you have plans to do. You've got big plans. You're already a big outfit. You've got nearly 100 advisors, some of them in PY, which will take you over the 100 mark. So you're a scaled advice business already, probably the largest, I think, in the country. If I'm right in saying that, you would know the answer to that question.
I mean, it depends if you're counting some of the brokers and things, but yes, I mean, I would say we are one of the largest, certainly.
And so with that, you're not resting on your laurels. You've got big plans. And before we get into that, I'd like you just to give our listeners a bit of context about Shadforth. You've got a 100-year history, but the modern firm really came together when a group of independent advice businesses merged. Can you take us back to when that happened and what was the ambition at the time for those firms?
Sure. I mean, maybe just deal with the 100-year thing.
Yep.
Because it links to those 13 firms. The 100 years goes back to 1924. Shadforth actually started off as a stockbroking firm in Tasmania. But the modern version of Shadforth really came together in the mid-2000s, culminating in 2007-8 with 13 very successful entrepreneurial, big or successful in their own right, but state-based firms coming together to form what is Shadforth today. And these were not struggling firms, Rob. These were successful entrepreneur firms that had basically ticked lots of boxes and were considered some of the best firms in the country on their own. So the miracle of Shadforth was getting 13 successful advisors with probably reasonable sized egos, and I think I know best, to come together and actually coalesce around an idea of what about if we could get all of the best ideas we have, agree on the big things, and then build a national private wealth firm where we could deliver a quality of advice and wealth management all around the country. And that was pretty amazing because if you think of the characters involved, they weren't lacking confidence, but they were actually all attracted to this bigger idea of really solving this opportunity to take a really high quality national private wealth firm. And again, to put away the egos and to build something that was genuinely going to be pretty special.
Yeah, you describe it as a miracle, and I imagine that is a good description because 13, as you say, highly successful firms already. I know those firms. I was around at the time. They were some of the biggest names in every state. They were the most successful entrepreneurial advice firms, independent firms that were doing great things already on their own. but they saw a vision of coming together and what that could look like. So that was some effort to get everyone around the table and get agreement as to how we were going to move forward as one united enterprise, and which became the Shadforth of today. Very impressive feat, to be sure.
There were some key figures in it, of course. There was also some serendipity, right? The GFC happened shortly after they'd all come together. And some of the arguments that may have seemed unsolvable, suddenly everyone's eyes opened wide and said, we need to stop arguing about the colour of the coffee cups. We need to get the big things right. And of course, they made those big calls and they've ended up being enduring and part of the reason we've been so successful since.
Yeah, terrific. And you've now been the CEO at Shadforth for around 8 years. When you reflect on that period, what have been the biggest shifts or decisions that you've had to take as the leader of the business that have shaped it to what it is today?
Just my background, Rob, I'm an advisor for the first 20 plus years of my career, and I had no plans to be the CEO of the business. I was successful in my own right, in my own way, and I had plenty of ideas about what the firm should do. So my own story of how I got here is kind of beside the point. I've been in this business or one of the businesses that made it up for 34 years. But if I just reflect on the biggest shifts, as amazing as those entrepreneurs were, and they're still friends of the firm and we love them and we recognize them all the time, they had done an amazing job, I think, putting together the best advice firm collectively of the previous 20 years. And they'd prepared the business beautifully to be sold. And, the business was sold for just under $700 million in 2014. And I have no criticism for anyone. That was an amazing feat. But coming into the role in 2018, the first thing I had to face up to is not a lot of thought had gone into how do we make it the best advice firm in the country for the next 20 years. So if you think about what that was, you'll remember it, Rob. In 2018, we had a Royal Commission. And I took the opportunity as the new CEO to say, hey, never waste a crisis. The other thing that was going on is we had a parent in IFL, we had a Royal Commission, and we're an advice business where all advice business basically survive and thrive on trust. Now, how was I going to marry up institutional ownership from the previous 13 guys coming together, being successful and then being purchased for 700 million? How do we actually restore trust in a business like Shadforth with institutional ownership at a time like that? And this is not sort of folklore now, this is true. I basically talked to Renato, who was the CEO of Insignia at the time, and the board, and said, hey, firstly, if we're going to be together, we have to make each other better every day. That means where we're strong, stay out of our way. Don't slow us down. Don't get in our way. Where we have gaps or weaknesses, or we haven't created enough client advantage, the door's open. Let's work together to try and find a way where we can create genuine client advantage. And I said, if we can't do those things, really you should probably sell us today because we don't make any sense. But if you support me with these things, it can be, number one, and most importantly, great for clients, a better outcome they get out otherwise. But it can be a great business and we can grow and will make sense in any environment, royal commissions, non-royal commissions. So when I think back at that, that was actually a watershed moment. I reflect on the IPAC business, which was a very good business in the late 80s, early 90s. It was sold a number of times to institutional shareholders, and it doesn't exist today for many reasons that I'm not close enough to know exactly why. But at some point, the people running that IPAC business lost the magic where they ran it like it was their own, and they looked for, if we're going to be together, how do we make clients win out of this? So if I just go back over the 8 years, taking that opportunity to reset everyone's objectives, that if we're going to be together, it has to be to the benefit of clients. Once you've done that, it's great if shareholders win as well, but it has to be to the benefit of clients. And we made some very big calls about our target operating model and how we would work with the core sort of fundamental, how can we create client advantage? In any world I want to be an advisor in, that's where I want to be. I also wanted to have a hugely competitive position. And I also wanted to build trust with clients. And if we ever have a Royal Commission again, I want to go first. Put me up. Let me talk about the way to do this properly. Now, I hope we don't have one.
Hope we don't need one.
But it was morally clarifying to say, here's the way you do it properly. And I got good support from the Insignia board and from Renato. And we were able to start building Shadforth into a position where we weren't as competitive as we wanted to be. We weren't winning strongly enough with new clients. And rather than being on the defensive about our ownership, we actually turned it into an advantage where we could outcompete peers. And have really interesting discussions with my leadership team, who are smart people, really good people. But the instinct at that time was to run away from institutional ownership and say, let's not talk about it. Let's pretend it isn't there. Whereas I think everyone else is doing that. And my own sort of instinct is what everyone else is doing is normally running towards mediocrity. What about if we could actually turn it into a sustainable client advantage that made us more competitive than everyone else? So it's a very long answer to the first question, Rob.
No, it's a great answer.
But I actually think it's where the foundations of Shadforth's success today, those key decisions have been incredibly important.
Yeah, it was a pivotal moment, wasn't it? As you say, you spoke to the board at Insignia about what your ambitions were for the business. You'd inherited a wonderful legacy of a business that had been built by a great group of founders, entrepreneurs that had put this thing together and built it for, as you say, for sale to come together. But you had to reset the agenda. You had to take that legacy and look forward 20 years, not backwards 20 years, and say, well, okay, now how do we actually make this thing the best business it can be? As you say, to build sustainable, competitive client advantage and leverage the capabilities of the institutional support that you had, which to their credit, they did support you and the ambitions that you had. And Shadforth obviously has gone from strength to strength since that time. So it's a great credit to you and the board that supported you to get here. But for listeners that don't know Shadforth really well, it's a name that's familiar. Give us a snapshot of the firm today. I talked about advisor numbers, but give us an idea of the overall sense of advisors and clients and the overall scale of the business across the country.
Sure. We have 270 staff. As you said, about 100 advisors. It's 97. There's 111 on the far. We've got younger advisors coming through. We operate across 12 offices, but really 6 capital city offices have 95% of the staff. We've got some regional offices and they make sense, but most of the staff are in the capital city offices. And today we look after just over 11,000 families. And those families have entrusted us to steward about $20 billion on their behalf. So 11,000 families. We do something like 18,000 in-person progress meetings a year, plus all the ones we do online, plus the new client work. And our revenue's on track to exceed $120 million from advice revenue this year. So we're a material advice business and we have great competitors like you, Rob, and a lot of people I respect, but there's not as many who are truly national. Our target clients are executives and professionals. They tend to move around the place. There are not as many competitors in that national private wealth firm space as perhaps there will be in the future.
Yeah, that is a great snapshot of the Shadforth of today, just the scale of that operation. You say we're a competitor, but I think we're kind of like 1/10 maybe of where you are. So it's a very well integrated and impressive national firm you've got running there, Terry. So one thing that you just mentioned there about executives and professionals, one thing that stood out from when we chatted earlier was a clear focus for you on the higher net worth clients. How would you describe the core client of Shadforth that you're designed to serve today?
Sure. I mean, I always start with executives and professionals. Our clients tend to be people who want to delegate. They're financially literate, but they don't want to do it themselves. And that means medical professionals, executives, all of those sorts of people. And yet, Rob, our average client size is about $1.8 million with us. But often it's 2 school teachers who've had super for 30 years and made a couple of sensible decisions here and there. So we're clearly not ultra high net worth. We do have quite a few ultra high net worth clients, but we really see our sort of sweet spot as people with $1 to $10 million.
Yeah.
And typically clients will come to us. We don't take on anyone who's not going to be an ongoing client. That's one rule that we have where we respect people who do that. It's not our business. So we're looking for people who want advice, value advice, and are prepared to pay for it on an ongoing basis. And people tend to come with us with $500,000 at least in the first year and with $2 million within the first couple of years. And when I talk to people about that, they say, oh, it's a really high, it's not that high net worth. Like it is, but there are a lot of mums and dads in Shadforth who have a few $1 million that we're looking after for them.
You say there about the clients that start out with $500,000 to get to $2 million. So how do you determine in that first instance whether they do what the ongoing relationship is? Is it something that you're very clear about right up front with the client that, if you're looking for this is what we do. But if you are looking for a piece of advice just to solve a one-off issue, that we're not the firm for you. Is there a very intentional upfront communication piece to the clients that are looking for ongoing versus transactional advice?
So obviously we do get some people coming in with a particular problem that they want us to solve. And I won't say we don't do it. It's just such a tiny part of what we do. It's irrelevant. And we do have a clear bias that everyone is better with an ongoing relationship, even if the trigger for them coming in is one need they have. Often when they've talked to us and we get the chance to show them our skills and what we can do, I said, do you really want us to now leave you alone to walk away with this and deal with it yourself? And people actually don't. So our view is everyone is better with an ongoing relationship with an advisor, and we'll talk about it later, but we're trying to get deeper in people's lives We're not trying to charge less. We're actually trying to be more meaningful, add more value. And that means we really do believe in ongoing advice. I want someone to solve episodic advice. It's just not going to be Shadforth.
Yeah, I couldn't agree more. It can relate to that point of view very thoroughly because you want to be there for the journey with the client because you can make a meaningful difference over time. You also want to be there to celebrate the success and the wins they get as a result of good advice and guiding them through key pivotal decisions in their life. So, yeah, I totally understand. But I want to talk a bit about the way in which you've had to think about your target client. You mentioned when we spoke earlier that there's a commercial imperative for the firm to keep moving up the value chain in terms of client wealth. And obviously, people are getting wealthier on average as well over time, just in pure inflation and property prices and asset markets and so on. So, what does your strategy look like in practice about that moving up the value chain in terms of the type of client you'll attract, the wealth that they bring to the table, that 500 to 2 million then, and but really your sweet spot, as you say, is $1 to $10 million mark. How do you reconcile this younger client who perhaps has high income that doesn't have the wealth yet? How do you deal with that versus this commercial imperative to go up the value chain?
I mean, the first thing is we stay in our lane. In the leadership team, there's no bad ideas in a brainstorm to come up with could we do this? Could we do that? And we did actually build a model of Shadforth Essentials, we called it. It was all our best ideas. But you know those barbers you go into, Rob, where it's got 10 haircuts on the wall, but everyone comes out with the same haircut? This was designed for smaller clients where we would do it online like this. They would have the benefit of all of our best ideas, but they were our best ideas only. And there's a business there. But again, for the time being, at least, we're staying in our lane, in our high net worth. As you know, the best way to run a better advice business is to move up the value chain. And we're trying to do that now. When I started, I got the leadership team together and I said, what are we going to stand for? Like, what's going to drive us? And I said, these are my three things. And I said, let's make decisions for the business as if we were the only shareholders. That gets your focus. We own this thing.
It's a great framing. Yep.
The second thing was let's spend money, and that can be more money or less money, like it was our own. Like I had to extend my line of credit against my house. Would we spend this money? So let's make decisions like we're the only owners. Let's spend money like it's our own. And the third thing was let's build a private wealth business that we'd use ourselves, have our families use ourselves, and we'd pay for. Now I said, if we focus on those three things, we're going to build a great business and we're going to make better decisions than we would. So that kind of focus doesn't allow us to stray off into esoteric things that I don't think are really the best use of Shadforth's time. So we stay in our lane. And as I said, we're not looking to charge less. Our overall wealth management and advice offering is incredibly competitive. That allows us to charge what I think is a great value fee, but a premium fee for our advice. And we're actually looking to do more for people, to see them more, to be more important to them, rather than to reduce that value.
Yeah, that trifecta of things that you think about when you're actually making decisions, they really are great core principles to live by, aren't they? Treat it like it's our own money, treat it like we're the only shareholders, and make sure we do it in such a way as we'd be happy to be clients of this thing we're building. And that's a great framing because you never want to be distant in the sense of thinking about who's getting the advice, how are we delivering it to the end client. If you think about yourself as that client, always, you're always making good decisions that serve ultimately the client because if you do great work for clients, improved client value equals improved enterprise value because that's ultimately how we build a great business is just look after our clients and do it in a way that preserves the benefits to both shareholders and employees, but making sure clients are never forgotten in the process as you get to be the size you are.
Yeah, and there's a power, Rob, in clear moral clarity. Who are we? What do we stand for? What are we going to do? How are we going to think about the business? So I'm upfront with everyone. Every cent I have is invested as per the average growth client for Shadforth. I live and breathe their outcomes. And I tell them all, every cent my family has, every cent outside direct property that they own is invested exactly as our median growth client or for my retired parts of my family, perhaps a little less aggressive. All of my friends in Perth who were my clients who have lots of money are invested the same as me. I'm not pretending, right? This is not transactional. These are our best ideas and the best way we can do things. And again, that just allows you to make better decisions and get up every day and keep following through on it because you know it's the right thing to do.
Yeah, because you're living it. You're not just talking about
Yeah.
it. You're actually living it personally. Can you talk to me about how you're dealing with this big question, intergenerational wealth transfer? I know this is something was touched on a second ago there, but how do you think about looking after the children of your current clients? Because there's obviously very wealthy clients in your client group that are going to be handing off significant wealth into the hands of the next generation. And how do you try to connect your business to those next inheritors of wealth and support the fact that, you've got wealthy clients that are going to be passing, whether after death or even before they pass, large sums of money to their children who don't have the same access at the moment to advice the way their parents do?
Yeah, it's a really good question. We've been wrestling with this for a while because the whole industry is not keeping enough of the wealth as it's flowing down. I think the number is something like 30% of it stays in the firm if you don't have a deliberate strategy to do it. And I've heard some advisors speak about it and say, it doesn't matter. They're low value clients in the short term. I can't afford to deal with them. And if you've got a sort of 3-year time frame for your business or yourself, maybe that's true. All the sort of research I look at says that if you're not adding younger people into your business, eventually the value of your enterprise, the value of what you're trying to do is actually going to be undermined by that. So we don't have perfect answers for this. We're getting better at it in that the family conversation is part of every client's progress meetings. And we have introduced only very recently a family advice guarantee. Now that family advice guarantee says if you're paying $12,000 or more, and our average client fee is about 10.5, if you're paying $12,000 or more, we will look after your children at no cost to you. So we'll do SOAs and advice for them. Those people can sometimes be good clients themselves. And perhaps if they're potentially Shadforth clients, we will charge them for ongoing advice if they want it. But we will get them on track. We'll help them with the basic things that parents want their children looked after. And then we're going to be the logical advisor that they will use. But the thing we've got to keep remembering is very few children of the clients want to deal with their parents' advisor. They're too old. They actually want to deal with someone within 5 years of themselves. So through that family advice guarantee, we're pairing a more senior advisor potentially up with someone closer to the age of the children coming through. Now, when I say children, they might be 40.
Yeah, sure.
That's how we're thinking about it. It's early days. The clients we've presented it to absolutely love it because they're secretly all a bit worried about, I've been so fortunate, life's been good to me. But Charlie and Madeline, geez, property prices are so high that perhaps their jobs are not paying as much. AI might take their jobs away. They're worried about their children. So it's actually a very good value add for the existing clients. And for us, if you're genuinely thinking long-term, and I drive the guys mad here by saying, firstly, we're not a financial planning business or a wealth management business. We're actually a professional services firm where all of our assets are people and the capability of our people. But secondly, we're not in the business of providing advice. Clearly we are, but we're actually in the business of making and keeping 50-year service promises to people. Because probably like you, Rob, our clients are coming to us mid-40s to mid-50s, and then they're staying for their whole life.
Yeah.
That's a long time. It's probably 40 or 50 years. So if we're thinking like that, that's the right way to frame the way we want to be dealing with people. And if we're thinking like that, then the clients of the firm are not just the husband and wife. It is the children. But we've got to be proactive in bringing them into the conversation.
Yeah, I love the way you're doing that. The family wealth guarantee for clients paying more than $12,000, their kids can get advice for free. In effect, they can come in, they can get a statement of advice, direction from an advisor that's more closely aligned to their age. So they're not dealing with mum and dad's advisor. But it's really building that connection and trust with the next generation of inheritors of the wealth that's going to flow to them at some point in the future. That's a good one. I like it. I haven't heard that strategy before, and I might steal that one from you, Terry, if that's okay.
That's fine, mate. There's no original ideas, just good ideas.
All right, let's talk about something that everyone's interested in hearing about what you are doing at the scale you're at. Technology, it is already and probably will continue to become a major differentiator for advice firms. You spoke about the work that you've got underway building something closer to a live financial plan inside a client app on their phone or their tablet. What are you trying to create there? And how might that change, do you think, the client experience, how people engage with their advisor and the advice that's being delivered?
Firstly, just to level set, I mean, like most of the industry, we still use Xplan. We have a very cool tool in Wealth Central, which is our client engagement modeling tool. But we're starting with that sort of core functionality that most people who are listening to this will be familiar with, the Xplan part of it anyway. And we're at the early stages of building out a whole new tech stack. And that involves a new CRM, it'll be Microsoft Dynamics, but also an app that not only is a live balance sheet for clients where it has all the investments we manage plus their bank accounts plus the property with the value updating regularly, but also with a stochastic model of their probability of success. It tells them every day. And basically, if their chance of success is within the acceptable range that we've said, markets can go up and down, doesn't matter. You're still going to achieve everything we've said you'd achieve and you don't have to worry. If the markets break through the bottom of the line in the tolerance, all the lights start flashing at Shadforth. You have to get them in and think again. But what we really want to do is get away from static financial plans where it's a piece of paper once a year to where it's live and we're interacting with them more regularly and reminding of the progress that they're making and the value that we're adding. Now, in the beginning, it will be a simple live balance sheet. We'll be able to push SOAs to them. Their client service agreements will be pushed to them. There'll be a secure portal on it. And again, they'll use their phone or they'll use a laptop. That is literally, the first version of that is months away. What we want to do with stochastic modeling and building out a comfort zone for people where we help them see where they're likely to achieve all their objectives, that's going to be drops over the next couple of years. But if I go back to the whole thing, we're thinking, given the growth plans we have for the business, having a world-class CRM is not non-negotiable.
Yep.
No one loves Xplan. And if they're listening, we want you to do it better. They do a lot of things. Do they do anything the way anyone really wants them to do? Does that mean we will not use them in the future? I think like most people, we'd like to be less reliant on them, and maybe we will move off them. Maybe we won't. People are really wrestling with that idea of, if you're not using Xplan, what is the alternative? So look, it's a big uplift for us. One of the benefits of having Insignia as a shareholder and Scott Hartley, who's the CEO, has a genuine interest in Shadforth and a genuine interest in advice. He's a client. He tells everyone, I'll tell you. But he knows that we need an investment in advice and a big capital investment, and we can afford to do it. Now, it's taking us longer than lots of my advisors would like, and we're being very methodical about it. But we're actually trying to build an advice ecosystem, advice and wealth management that joins everything up. And if we're going to have the inorganic growth that we're looking to, Rob, one of the things that'll just be table stakes is you have to be bringing value in your technology. So it's early days, but I'm pretty excited about what is in the roadmap over the next couple of years.
Yeah, it's a wonderful thing to have a committed parent and CEO of a parent company that sees the value of advice and sees the potential of what advice could be if delivered more live and be not a moment in time piece of advice, but actually an engaged professional working alongside the client throughout their days and the year, and not just getting a snapshot and a statement of advice, once a year, if that's what it takes. But I love that vision. I think it's a reality of where everyone's thinking about going, and the X-Plan dependency. I think people can relate to that story. I'm reading and watching as much as I can just on the way technology's moving at the moment. It's a fascinating time to be alive in the technology space. It's going to be very interesting to see where we are even a year from now. And you clearly have a very clear vision of what you're looking to create. I look forward to checking in. Maybe we'll do this again in 12 months, Terry, and have a chat about exactly what's happened.
Yeah, it would be nice if we had a few drops that I could talk to then. I'm looking at lots of project management packs and contracts we're signing. It'll be better when we have 100. I mean, Shadforth's superpower is 100 great advisors, like really great advisors, all agreeing on the big things and then taking advantage of it together. So be interesting in 12 months, Rob, if maybe I'll have a podcast and I'll interview you and we can talk about it then.
Yeah, okay. All right, let's talk about the advisors, the 97 plus 11 that you've got doing their PY, that are on the FAR and some doing their PY. So you talk about having great tech as being one of the key drivers of what will attract and retain your best people, because it's table stakes to be the best at this, and that'll draw people in. How do you think about today and in the future attracting, developing and retaining great advisor talent? Because you've got one of the best talented group of advisors in the country. They're often appearing in these awards that go around. So how do you think about attracting and developing and retaining your talent?
Sure. Historically, we've grown our own. So of the 97 advisors, 93 of them started with us as graduates, average 10 years, 17 years, and they bleed Shadforth. They're not here for a transaction. They're actually here for a career. They're building something and they're coming with us. So the first thing is we will continue to do that. It is slower, but the quality we get and the alignment of ethics and the commitment to best interest and fiduciary standards, all those things that we get through them is worth it, in my opinion, to have the corpus of your advisors homegrown. Now we do have, so of those 97, there's also 65 associate advisors and senior associate advisors, and about 20 of them can provide advice now. They're either on the FAR or just finishing their professional year. And that's our next line of advisors. That's our huge strength. They're quality young people. I'm always impressed by them, by how quickly they adopt change, and obviously technology is natural for them. My challenge is to grow the firm quickly enough so we can bring 10 of them on a year, because they all want to be advisors. And I don't know, Rob, if you've seen this in your business, they're a fraction impatient.
Yeah, I know it well.
They're also really attractive to our peers who perhaps don't have the ability or have chosen not to invest in professional years. So I do get frustrated with that because we put a lot of time and effort into them, and they're fantastic young people. And they might be 6 months or 12 months away from their private wealth advisor gig with us. At that point, they're the most dangerous because someone can come in and offer them $20,000 or $30,000 more. So we want to keep as many of them as possible. And we want them to see that the long-term value of their career is going to be fantastic with Shadforth. So that's the future, right? That a lot of them will become our next line of advisors. We did an exercise with the advisors at a national event we had where we got everyone to stand in line from the person who'd been here the longest to the person who's the most junior. There's a very long line. But we also compared it to one that was done sort of 15 years ago. And the advisor at the end of the line, who was the newest 15 years ago, was now one of the most mature guys in the line. So anyway, it was just a point about saying one of the things we've done is we've had the sort of vibe of paying it forward. And our more senior advisors, because they were mentored by the Sam Gannons and Craig Sargents and David Haynes, all the legends of the place, there's a Shadforth thing where they actually love seeing the young client relationship manager, paraplanner, associate become a private wealth advisor and then probably be better than they are because they adopt change earlier. So if you're thinking about what's the strength of Shadforth, that army of young advisors coming through is a key strength. And we've got to obviously look after them and make sure they can see the value in their career with Shadforth. And we've got to grow fast enough because if you just make someone an advisor, but they're 29 and they've supported great advisors, but they haven't ever won a client themselves, we want to be able to make sure they have a decent book to start with and we put enough time and effort into them so they can add material clients every year and they're going to actually grow their careers, not fail, basically.
You're going to have literally waves and waves of advisors coming through the strategy that you've adopted there, which is that graduate approach and bringing people through homegrown. We've adopted the same approach because it has, for us, like you, been the most successful strategy that we've adopted. Yeah, I can just imagine, as you say, you're thinking about growing the business so that you actually can give them the opportunity that they want when they're ready for it. So when they're ready, the business has to also be ready for them. So that imperative is always there. We have 4 of our team going through PY, just for the record. So we're much the same, again, on a smaller scale, but very similar approach there, Terry. So I like the fact that we're on the same page there. And, you touched on what makes them want to stay. Coming from within, knowing how Shadforth works, becoming very comfortable with the culture and the way the business is growing, giving the opportunity to them. But how do you think about them growing their client base and participating in perhaps the growth of the firm in an equity sense? How important is ownership or a mindset of ownership in building that team culture that you've established?
Well, and ultimately, I think it's key. You can have the best advisors in the world, you can create a great culture and you can support people well. They are rational actors, okay? And they've got a 30-year career and rational actors think, how do I get the best value for my career? And they're sort of very important, a great culture, great support staff, a technology stack, all those sorts of things. But in this environment, I want every advisor equitized and I want them aligned with me. So we've built a long-term incentive scheme for advisors that grows. That kind of means by the end of their career, they can have a very meaningful, multiple $1 million outcome, but they give it all away if they leave and join a competitor. They've got to finish their careers with us, but they build up that equity over time. They have shorter term equity that they can take out, but the long-term equity, and I just think it's important. We've obviously got to pay them well in cash. We've got to support them well. We've got to have a winning value proposition where they can win clients and succeed. We've got to have a culture where they like coming in and they actually like the place and they feel proud to work for us. But they're rational actors and they also get used to spending big incomes and they'd like a capital event at the end of their life. So I'm really proud of this. It was the missing piece of the pie. I think we've got a very good REM scheme for advisors, uncapped, but they've now got a chance to create a capital event at the end of their careers and they don't have to borrow any money. As you know, they don't have to employ staff or worry about any of those things. So yeah, I think it's super important. And I think it'll be very important for our existing advisors. Pretty attractive market. Everyone wants advisors at the moment. But as we grow and bring advisors in, we want advisors to buy into the ownership of the firm as well.
Yeah, just say they're rational actors. They're pretty good at maths. They can do the cash flow modeling and they figure out it's a pretty good deal. So when they can see the opportunity to earn a very good income, but also be a part of the growth of the firm and have a capital event at the end if they stay there for the duration, it's treating them like owners because that's how owners have to think. We're building something that I'll only get the benefit of if I'm here for the long term. You can't think like an owner and be in and out in 5 years. That's not how ownership works. So I love that. You've clearly got a very good model because you've got such a strong retention of great talent in your team. I knew there must be something you've got there that makes it super attractive to not only turn up and give advice at Shadforth, but stick around for the long term as well. So let's talk about the growth of the business. And You are growing strongly organically. I think you're double digits. You've talked about being double digits in the last few years, and that's impressive for the size firm you are to keep growing at double digit rates, because it gets harder as you get bigger to grow at double digits, but well done on that. You're also thinking about acquisitions now. It's something that you've very publicly stated, or at least if it wasn't public, I certainly knew about it because we end up in a study group together from time to time at a national level, and you've shared that with the people attending. What does Shadforth's proposition look like now for advisors that are maybe considering joining the firm, that are interested in maybe being acquired by Shadforth and merging in and becoming a part of the growth journey that you're on?
Yeah, might just backtrack. Last 3 years, we've certainly been growing at double-digit returns. Before that, we were coming out of that 2018 period. How do we make ourselves competitive? What's our value proposition look like? And it wasn't until we kind of fixed those things. And to be honest, we had to build the muscle memory back in our advisors about growth being just part of everyone's job. But yeah, we're growing really strongly organically. And quite frankly, Rob, we wouldn't be thinking about the inorganic growth if we didn't have that well in hand. And I have to say that FY this year is probably the first year that I've believed from day one of the year, we are likely to overreach what seemed like an incredible amount of growth in new client numbers for the year. And that's a lot of things. It's strong markets. It's half the number of advisors to a few years ago. We spent a lot of time on referrals training and making sure that we're asking client for feedback, the Dan Allison stuff.
Yep.
But yeah, if the question was about growth, we wouldn't be looking at M&A if we weren't growing organically. To the firms that we're looking at, the first thing to say is we are integrating, we are not aggregating. Okay, there are other business models out there and I wish them well. We're actually looking for people who believe in our target operating model, who basically believe in comprehensive holistic advice, who are aligned or semi-aligned with our evidence-based investment philosophy, who believe in working in teams and in using technology to manage portfolios, and believe that ultimately the business will only be successful and able to serve the clients well long-term if you're in a growth mode. So when I show potential acquisitions, hey, this is who we are and what we believe in, it either lights up their eyes and they get it and they go, wow, we're on the same page. And then if we are on the same page, I believe someone like Shadforth can pay people as much or more than many other businesses because we have the scale to take advantage of it. So I guess we're going to talk to a lot of people, Rob. We're going to listen to what a lot of people are looking for. We're going to be really clear on if you join Shadforth, this is what the outcome will be, assuming you can get a great price. But this is what your client experience would be. This is what your experience would be. And this is what the back end of your career looks like. And that can be a lot of support, very well paid. You can build up more equity. And it's early days, but so far we did our first acquisition for ages in November last year, October last year, PMD. Great business. Tim Donahue, Roger and James from Melbourne and Roxy were the three advisors and major shareholders. That's just a beautiful business. It's 400 higher net worth clients, $10,000 or $11,000 each. They are Shadforth clients. And we brought Tim and Roger and James in and they haven't missed a beat. And they're a perfect fit for us. I'm not going to tell you what the outcome was, but I think they're happy. So will every acquisition be as good a fit as that? Well, that's quite difficult. I mean, that was CBD, was literally hundreds of meters away from our Melbourne office. But there's lots of opportunity out there. I don't think anyone knows, or until recently has really known that we're out there looking to acquire the right kind of businesses.
Yeah, that one sounds like a very, very neat fit.
It was.
And as you approach firms, are you giving them options around not just paying cash for those acquisitions? Are they wanting sometimes to roll some of the value they've established into equity in the business? So they are doing a cash and equity or a combination?
Some of them want to get some clarity on price today, but some of them are backing their, whatever their EBIT is today, they think they can double it over 5 years. So we're taking a first stake. And if they do, we've locked in a multiple that will pay for the second stake. There are others who are coming in and we're effectively adding the equity via the long-term incentive scheme I talked about. I wouldn't say there's one model. And to be fair, we haven't done enough of them yet to really say this is the way we'll do it. Who are the community that we're looking for? Our average fee is around $10,000. We're not going to go down market. So we're looking for people who are either at our fee or around that fee. Now, it's different in different states. It's almost double that in Sydney and it's about $8,000 in Tasmania. So there's a bunch of differences state to state. But we're looking for people who comprehensive advice, similar size clients who want ongoing wealth and who want more from their advisors, not a cheaper service, not less. How can I skinny this thing down and give them less? And that's not what we're doing. And we want the advisors. We'd never buy a book. We actually want the advisors and we want them to finish their career and be able to mark out for them a way that they can not only get the right price for their business, we can keep the 50-year promises they've been making their clients, and they can do very well through income and further equity within the Shadforth business. So that's the proposition. I'm biased, but I think it's compelling. for the right advisors in the right part of their career.
Yeah. It's clear that you've got variable options there for people who are looking to capitalise on what they've built, but also continue to serve their clients really well and maybe get a second bite of the cherry down the track as well if they do join. Because as you say, you're not buying books of business, you're buying businesses and bringing the talent with it so that you actually can help those clients get a great experience with you, but also the advisors a great experience for being a part of the Shadforth journey. And in that context, you've talked about Shadforth, the idea here of becoming a pillar, a defining pillar in advice in Australia, similar to the way firms like PwC and KPMG are pillars in the accounting business. What does that ambition to become a pillar in financial advice in Australia look like for you in practical terms?
I mean, the broader IFL business put a flag in the ground 12 months ago. And our part of that was that we would double the size of Shadforth from its 25 level through to 2030. We will double the size of the business, and more of it will come from organic growth, but we will absolutely add M&A to close the gap and probably go further than that. To be honest, Rob, our real vision, the way I asked the leadership team to think about this, is think about Shadforth 10x. Think about it 10 times as big, because no one's done this. 1,000 private wealth advisors, $200 billion of assets under management, $1 billion plus of advice revenue, pushing towards $500 million of EBITDA. Not because that's necessarily success, but if you're thinking that way, well, how would we build our tech stack? How would we think about embracing AI to make our advisors more productive? How would we think about, we have a winning value proposition now that allows us to meet best interest every day and deliver great client outcomes. What would it need to look like to win really big? So again, don't write down that I'm saying we're going to be 10 times bigger by 2030, but that thinking is what we're trying to do to make sure we don't just get stuck in the small gains, which are important, but think differently. If we thought about how we're really going to change the advice game, then we'd be thinking about being 10 times bigger and helping 10 times as many people and making 10 times as much positive impact.
Well, as it happens, Terry, I'm reading a book. Well, I listen to books, actually. I don't read them because I just go out for a walk or a run and listen to a book. But the book I'm reading or listening to is called The Science of Scaling by Dr. Benjamin Hardy. And the first chapters talk about set a goal so big you think it's impossible as a key way of approaching how to really build a great business and a big business, because it makes you think differently, doesn't it?
It does.
You think about going 10 times, you can't just think linearly. You have to start thinking, what would it take to go 10 times to where we are? And it changes your frame of mind and the decisions you take today.
Yeah, and it helps you see the reward for succeeding when you can see how big it could be. All of a sudden your aperture opens up to, oh, we could do this, or we could do that. And, yes, that would be difficult initially, but if it made that much difference, it would be worthwhile.
Yeah. Now, you're a busy man.
Yep.
And I appreciate your time this morning for taking the time out to have a chat to us and tell everyone what the impressive business of Shadforth is doing. But I've got one more question for you, if that's okay.
Mm-hmm.
Looking ahead, next 10 to 20 years, what would success look like for you? You've talked about the big vision there. And what role do you hope the firm will play in the future of advice in Australia in 10 to 20 years' time?
First thing to say, Rob, is I was 60 last month.
Happy birthday for last month.
Yeah, thank you. Be nice to think I'm around in this job in 10 to 20 years. The reality is I probably won't. I've had 8 years as CEO and there will come a natural end to this. I do have lots of petrol in the tank though. And I actually think the best years are in front of us. The next 5 years are incredibly exciting. So look, at the moment, Shadforth's very well known amongst our clients and amongst the industry, but no one else really knows who we are. Okay, so if you're thinking 10 to 20 years from now, I would expect us to be the preeminent advice name in the business and considered as a professional services firm like Freehills is in law, or PwC is in accounting, or McKinsey is in consulting, but where our national reach and where people know that there's a quality outcome that Shadforth's been delivering for 110 years at that time, and that the success that we've had over the last 100 years, but since we've come together in the last 18 years, is dwarfed, right? Actually, I started the job saying, I want the job because I want to leave the place better than I found it 20 odd years ago, 30 odd years ago.
We can say that now.
I do.
But you've still got petrol in the tank.
Got a lot of petrol in the tank. The most exciting time is going to be the next 5 years.
When we first chatted a couple of weeks back, you and I are on the same page on this. There's never been a better time in advice. I think just the awareness of what we do, I think even in political circles, they understand the social good that we can do if more people get advice from advisors. And there's just too few around doing it. So there's so many people looking for what we do. And so no wonder you're growing strongly and have big ambitions, which, as you say, you're going to reach beyond your target this year, just purely based on the demand that's coming through the door, even before you do the inorganic acquisition stuff. So it's impressive. Do you have any final thoughts, Terry, before we wrap our chat up today?
No, just thanks for having me. I've admired your business for a long time. I think I've met you or your brother. I've met one of you somewhere at a Dimensional or some industry event. So look, thanks for having me on. I'm always happy to talk about the Shadforth story. It is something we're really proud of. And yeah, I'd love to come back sometime, mate, and tell you how we're progressing.
Yeah, it's a good story. And I really appreciate taking the time today to have a chat about it, because the feeling is mutual. You're an impressive business and you're an impressive leader of a great business. And there's a lot to learn from what you're doing and what Shadforth is doing. So I really appreciate you taking the time, Terry Dillon, today, talking to me on the Trusted Advisor podcast.
Thanks, Rob.
Thanks for tuning into the Trusted Advisor. I hope today's conversation brought you new insights and inspiration for growing your business. If you enjoyed this episode, please subscribe on your favourite podcast platform, leave a review and share it with others in the industry. And don't forget to connect with us on LinkedIn for updates on future episodes. Until next time, keep building trust, embracing innovation and driving success in your practice.